Hey, Dustin Tibbetts here, financial advisor with Jazz Wealth Managers. How you doing out there? Hope you're having a good new year so far. I've got a few predictions here, and I don't know if you care or not, but I do need to start this by saying these are just guesses. These are just fun, debatable topics. In no way am I making any recommendations. I get in a lot of trouble if I make recommendations, so you should always consult with your financial advisor. If that happens to be us, I'm happy to help. If it's somebody else, then maybe you'll think about working with Jazz Wealth. All right, first thing, let's just dive into it. I think in 2021, oil prices will be higher. I don't know if you like that or not, but I think they'll be higher. Here's the thing. Oil was down. It was the worst sector in 2020, losing 36%, was down over 50% at one point. And I just think that you'll see that recovery there for a number of different reasons. But from a purely statistical reason, anytime oil loses, actually, can I show it? Anytime, I'll use XLE as one of our tools here that we kind of refining, just trying to play with something here. Anytime we lose, say, 15% in a given year, let's look back 20 years. There's not going to be a lot of history on this. Let's take a look and see what happens here. Anytime energy loses more than 15 or so % in a given year, the next year is positive by, let's call it an average of 15 to 17% there. So you got some good years and stuff, but there's not a lot of data to go on there, but you usually see oil come, or energy come roaring back as people go shopping for those discounts, even if it tends to be a little bit of rotation there. So in my opinion, I think energy prices will be higher, which helps the oil stocks and oil explorer stocks, everything that you're looking at in there. The second thing for me, I think the dollar continues lower. I don't know if you've seen the dollar. How can I show you here? I'll go over here. You just use something like the UUP. It's just been demolished in 2020. We got money printing everywhere. In fact, 25% of all dollars created. Let me see if I can show this here. I'll go over back here to take a look at that. Here, look at the money supply. 25% of all dollars created and in existence were created in 2020 with stimulus and all. I mean, with the virus and all the issues we had there. You got a widening trade deficit. You've got easy monetary policy. All that's going to be weak for the dollar, right? So I just think the dollar is going to happen to be weaker as well. I also think inflation is going to be higher with all of the dollars that are being printed. I think I have a way to show you that. So here's the last time this happened, 1986 to 1990. It's the last time we added as much or such a large amount to the U.S. money supply. And so we look at inflation over top of that. So in purple behind there, you've got the money supply. The rate of change is what I'm trying to highlight or compare to with 2020. And then if you look at the inflation rate, it spent 4 years just grinding higher from about 1% all the way up to 4.5% or so. So it gives you an idea of what to expect. There were some sharp increases there as 1987 got started. I don't know that we'll see that this year. Hopefully we don't see a pop of 3% just like that. But basically you had rising inflation. I think inflation is going to be higher. I don't think a lot of people will disagree with that. I don't know when it happens, but I do think that's something that will happen. All right, moving on. We've got I think the home sales / buildings surge will continue in 2020. We've got low rates and everything. You've got prices moving higher, supply moving lower. You notice the home builders had a good year. Anything related to home sales, whether they were resales or new sales, just did well, and I think that continues going into the new year. The only thing that could stop that would be higher rates, and there's just no sign of that to come. If we take a look at the new single-family houses for sale, you spent all of 2020 continuing with 2019. Inventory lower and lower and lower, and some of that's because you can't have a bankruptcy or a foreclosure. You can't have those exchanges of properties, bank-owned properties and things at the moment. But you've got this decline in inventory, and look at the number of homes sold. So the number of homes sold is rising, the inventory is going down. All that means is you've got a reason to believe prices are moving up, which helps the home builders and helps those that supply the home builders, your Home Depot, Sherwin-Williams, things like that. So I think that happens this year. One thing that can hurt that, which would really surge the inventory, is if there really are a lot of foreclosures out there. I don't know. I don't track that. But if there really are a lot of pending foreclosures or people that really are behind on their payments and then become foreclosed on, maybe that changes things, but we've got ways to see. What else do we got? Hey, I think your crypto stuff, your Bitcoin, I think it's going to take a break in the first part of the year. Let's take a quick look over here. Where are we at here? Crypto off the charts for the first tradable market day, I should say, not for Bitcoin. Look at this. This is just a rocket ship. It's called a parabolic move, or a climactic move, whatever you want to call it. Super extended. I think it spends the first part of the year just kind of calming down. This acceleration and volatility here in the short term, I think, dries up because demand will dry up the more expensive that it gets. This happened in the past. It did the same thing. Obviously not at these prices, but it happened in the past. And also the IRS is being really particular now on Bitcoin and crypto traders. I think they're actually going to be tougher in 2021. 2020, you know, was very tough. If you happen to own Bitcoin or crypto in any way, any other coins, you have to justify your average cost. And they ain't messing around because they don't know what it is. So you're gonna have to prove exactly what that is. I think it's going to get tougher for people. And if you get beaten up by the IRS in 2020, I think it makes you think twice about maybe paying such high prices at these points. At some point, right, if the price is discounted, you say, screw the IRS. I'll take the gain and then I'll figure it out later. I mean, with the rate of change that this thing's moving at. But I do think it takes a little bit of a break there. And then finally, I really think this virus thing isn't going anywhere. Aside from what happens with the virus, I'm no expert there and I won't pretend to be, but with what's happened, you do not revamp businesses, get them back open, get them back profitable if they were, all in the span of a year. This is going to take a long time. So I think that even if we vaccinate 1/3 of the population or something and we all start to feel better, there's no mutated version that gains any traction, it's going to take a long time for people to get back on their feet and restart. You're behind on your mortgage, you're behind on your payments, you're behind on your business, making money there. You may need more funding to stay open if you even do. Just even say that there's a couple million, which I know the number is much bigger, especially in some states. Even if it's just a couple million, that has an impact on the economy in the long term. And I just don't think we recover from that as an economy this year. I think it's going to take a little bit longer. Anyway, so there you go. I think oil prices are higher. I think the dollar continues lower. Inflation is going to be higher. Home sales will be higher. Well, the enjoyment of that boom in the housing sector continues. I think crypto takes a break first half of the year in a kind of a probably bigger way. And I think the virus is still going to have some pressure on the overall economy. And we'll see what happens going forward. Hope this helps. Just kind of a fun one for a Friday. You enjoy the rest of your day, and thanks for your support.